Thank you very much. I'm really happy to be here today, and it's really I think it's a really excellent seminar. I'll be looking forward to the discussion later. So this should be this event should just continue to get more exciting as we go along. How do I operate this? Do I have to ask for the next slide? Right. Prospects for harmonization of the national standard credit ratings. I like to point out I'm a local currency bond guy. I used to do dollar bonds, but I don't anymore. So when I talk about ratings, I'm focusing my attention on local currency bond ratings. And when we talk about rating standards for local currency bonds, usually we say national standard as opposed to global standard. So the prospects for harmonization of national standard credit rating agencies of Asia in coming years is primarily a function of the market's overall growth, especially growth of the market's corporate bond sector, which has been the most rapidly growing sector, the emergence of institutional investors as a more important investor class, and integration of the global bond, I should say, of the actual bond markets themselves. At the present time, national standard ratings are well developed in the three largest markets, China, India, and Korea, but are still a work in progress in some of the Southeast Asian markets. Sometimes local investors in a particular Southeast Asian market don't really need or look to having an actual credit rating. Some issuers issue without a credit rating at all, or if they've issued in the dollar bond market, they simply issue a local currency bond on the basis of the dollar rating. So this is something that we would hope would change over time. But for this situation to change, the local corporate bond markets themselves need to grow and mature. This is in fact happening, as I said, in the larger markets, which have reached a very significant size, around 2 to 3 billion in India. Could I have could we change the slide? Change the slide, please. There we go. Actually, this is the slide that Hung just showed. This is the size of the bond market for emerging East Asia. That is the ASEAN plus 3 countries, less Japan. Could we go to the next slide? Here we add India to it, and the market becomes quite a bit larger. The Indian market is interesting because it has a very large and diverse corporate market, and in particular, it has a very large and diverse market for SMEs, small and medium-sized enterprises, which largely issue on a private placement basis. This, in many ways, is a model for what we might like to see happen in other markets in coming years. Next slide, please. Also, as I mentioned before, the domestic financing profiles of the Asian countries are very interesting. Corporate bonds, actually bonds in general, are playing an increasingly important part in financing the economies of Asia. This is particularly important at a time when Basel III requirements, conditions are being implemented. Probably banks in coming years will be more cautious in granting loans to their customers. For that reason, we expect to see continued growth of the corporate bond market. Can I have the next slide, please? This is one of my favorite slides. And in our database at Asian Bonds Online, besides having data on bonds outstanding, we maintain data on actual issuance. That is, this is a flow concept. And if you will look at we'll look at these two here, we see that central bank issuance actually has dropped since the height of our recent financial crisis. But however, corporate bond issuance on the right-hand side, if you note the purple bars there, have continued to rise. And actually, in the fourth quarter of this year, corporate bond issuance was at an all-time high. And that's a very powerful issuance because corporates issue on longer tenors. And so that increase in in tenor is supporting an increasingly large stock of of bonds outstanding. Thus, for the market as a whole, I should say in the East Asian market as a whole, corporate bonds grew 17% year on year last year. That's a very impressive growth rate, which we hope will continue to be maintained in coming years. Next slide, please. The other requirement, I think, for development of or sustainability of a more harmonized credit rating market is growth of CSIs, that is, contractual savings investors. Not to be confused, of course, with the Hollywood TV series. But it's really quite amazing that what is happening here, especially in Malaysia, where we have a fairly well-developed pension system, and that these institutional investors are playing an increasingly important part in the region's bond markets, and they have a greater need for bond ratings than individual investors, who, as I mentioned before, sometimes feel comfortable buying bonds without an explicit rating. The next slide, please. And here, they're also active in government bonds. And can I have the last slide, please? This compares the CSI holdings of government and corporate bonds. In the case of the PRC, Korea, and Malaysia, their holdings of corporate bonds are more significant than their holdings of government bonds. Could the next slide, please? As we discussed earlier, the oh, excuse me. Okay, this one is fine. However, although my focus today is really about national scale ratings, nevertheless, when investors look at buying a bond, they nevertheless intuitively want to compare the global scale ratings with the national scale ratings. The national scale ratings are anchored to the most creditworthy issuer in the domestic market, in most cases the sovereign itself. The objective of the national scale ratings is to establish a reliable standard, while also providing a degree of granularity for individual markets. Could I have the next slide? Again, this is the, let's just save time, let's just have the next slide, please. Here we go. This is an interesting comparison. Our friends at S&P have created an ASEAN scale, a sort of a regional scale rating, which helps us compare all credits in ASEAN to global long-term ratings. And what's interesting about this scale is it gives us greater granularity at the upper end of the scale. If you could go to the next slide, please. This is a case of Brazil, not an Asian country, but in this case it provides a larger degree of granularity at the bottom end of the scale. I presented this one because of its emphasis on the bottom end of the scale. I think as the market develops, we'll see more of these emerging for Asia, depending on the nature of the market, with emphasis at appropriate ends of the scale. Can we go on? Next slide, please. The question is how, one other piece of analysis that is coming our way is from our good friends at ACRA, who have begun to prepare cumulative default rates and ratios. I think some of this data will be provided at one of the presentations in coming days. This is a standard procedure in the more development markets, but is relatively new to Asia. Could we go to the next slide? Oh dear. Okay, here we go. This would be a typical cumulative default rate. This would be, this is data based on the historical default experience in various countries. And this would be rate data based on global ratings. And again, you see relatively low default rates for AAA, AA. They begin to rise for A and then rise sharply for triple B. But this is based on, the people at ACRA have prepared this based on data they have gleaned from the global rating agencies. Go to the next slide, please. Here they have done some very interesting groundbreaking work looking at data gathered by local agencies. And here we see the curve for the ASEAN countries is considerably above that for the global rating agencies. This mainly reflects the newness of the data, the fact that we don't have the time series that we do for the more developed markets, or even that the global rating agencies have, or the number of ratings. As this is still a work in progress, and as it moves forward, we would expect to see the upper red line move back down toward the bottom line. Next line, please. Another interesting question is the methodologies, which I think our friends from China will discuss next. In many ways, there are differences, but in many ways, they're not so profound. If we look at bond evaluation, that's an exercise in looking at the structure of the instrument. Right now in Asia, most of the bonds are fairly generic, especially ones issued by corps. It's only relatively recently that we have begun to have, say, perpetuals. Going forward, we hope to have some guaranteed bonds like the PPP bonds. We will have different types of bonds with more interesting structures that would require more work on assessing the structure of the bond. But however, probably the credit process, the actual evaluation, may not be so different between the global rating agencies and the domestic rating agencies, and perhaps this is a area where a fair degree of harmonization has already been achieved. Could I have the next slide, please? Then there's the interesting issue of how investors use credit ratings. I used to be a credit officer myself at a commercial bank and then at an investment bank. And one interesting thing about the global rating agencies is that they tell clients that their ratings are an opinion. They're an important element in their rating process, but that clients still have an obligation to conduct their own analysis. And also, while we like harmonization, we hope it will continue and improve, we don't want too much harmonization. We still want to have some differences in opinion. In fact, at the present time, if you look at various ratings, even for sovereigns, there are differences in ratings. And when one reads the analysis of different rating houses, it's very interesting to understand how they have somewhat different opinions or nuances in their analysis. So while we want harmonization, we still want some amount of diversity, which I personally would view as a good thing. Could I have the next slide, please? Essentially, this is what pretty much sums up what I've just said. To keep on my time schedule, to have further progress on harmonization, we need further progress on regional economic and financial integration. This is the work of the Asian Bond Market Initiative, and we'll have a seminar the next couple of days on this, on what has been accomplished. As the governor has said already, this is supported by improved fiscal performance and stronger sovereign balance sheets in the region. But one thing that is missing is a willingness of investors in Asia to invest in other Asian countries. We at Asian Bonds Online did an investor survey last year, which I think Mr. Huang perhaps just had referred to. You have the next slide, please. And it was on the topic of why don't investors invest more in other Asian countries. At the present time, if you talk to investors, they invest in their own market, they have a home bias, and then their next choice for investment is the US, is Europe, maybe Australia, and in some cases even Brazil. But they still, investment in other Asian countries is still a work in progress, and that's something we're very interested in, hoping will make progress in coming years. To the extent we make progress in encouraging intra-Asian investment, it will put pressure on the market, if you will, to improve the harmonization. It will create a greater demand for harmonization of ratings. This is some material from our most recent Asian Bond Monitor, our quarterly publication, which briefly summarizes the investment methodology of local, I should say, of Asian investors, and how they go about analyzing investments in their own markets as well as in neighboring Asian markets. But anyway, this is still a work in progress, and we hope we will make more progress in this regard, which will be a force for greater harmonization of the region's local currency bond markets, ratings, and rating methodologies. Thank you.